Okay, so let's be honest, most of you probably got into property because you've likely seen the adverts about how much money you can potentially make in property investing, right? But alongside making money in property, you will also be giving some away. And no, I'm not referring to charities or non-profit organizations, although you could. Well, actually, you should. I mean, of course, if you want to. Anyway, ignore that. But the money that you actually have to give away is, of course, for tax. So I truly hope that you at least account for tax when you're setting up your property business. So this video, I'm gonna run through the taxes that are involved in property investment that you need to be aware of. Aaron, roll that intro, please. Okay, let's jump straight into this one and kick it off with stamp duty. So this is a common one that actually has been in the news recently. Now, as of 2020, and when you're probably watching this video, the UK government has made some allowances for first-time buyers and on the stamp duty that you would have to pay up to properties of the value of £500,000. Now, sadly, for those of us who are purchasing additional properties, this helps us literally about this much. Well, actually, it's this much. But if I did this first, it'd just be like I'm making a fist and, well, it just kind of wouldn't make sense. Anyway, stamp duty is a tax that you usually pay on a property or land over a certain price. And usually you pay stamp duty when you buy a freehold, for example, or you buy a new or existing leasehold, you buy a property through a shared ownership scheme, as an example. Or the other one is if you're transferred land or property in exchange for payment. For example, you may take on a mortgage or buy a share within a particular house. Now, for any of you thinking, wow, this guy's pretty smart, well, yes, you'd be right. But secondly, I'm also just lifting this straight off the government website, which you should all be familiar with, especially in terms of legislation and learning about property. But I thought, hey, I'm gonna make your life easier and hopefully you appreciate my efforts. And now here comes a shameless plug. Maybe consider subscribing or hitting that like button because I have so much more information to give you on a weekly, daily, hourly basis, depending on when you watch these videos. Okay, so next up, as a property landlord who, let's say you have buy-to-lets in your personal name, or you wish to acquire buy-to-lets in your personal name. Hopefully you watch this video first though. You will be liable for income tax. Now, since Section 24 has popped up and, well, ruined everyone's Christmas, investors are now most often buying in limited companies. But hey, you can't escape tax here either because you would therefore be liable to pay corporation tax. Now, just a very quick one on this. If you then choose to take profits maybe from this company, you are then going to be liable to pay income tax. Now, at this stage, before I even confuse myself and confuse any of you, I would definitely ask that you seek further tax advice from a professional because my understanding pretty much stops there. But these are the taxes that you at least need to be aware of and start accounting for as you start to make money. Because the last thing you want to be doing is thinking you're making all this money, then the tax man comes knocking and yes, you're skint. Moving on, capital gains tax. Now this is something that we need to talk about. Now to put it simply, capital gains tax is a tax on a profit when you sell or dispose of an asset that has now increased in value. It's effectively the gain that you made, i.e. the profit, and it's only that amount that you will actually be taxed on. So I'll give you a quick example. You buy a house for 50,000, you do some stuff to it, you sell it for 100,000, you now have to pay capital gains tax on the 50,000. Okay, that's probably not the best example as there's two 50,000s in here, but I think you know what I mean, right? 100,000 minus 50,000, that's the profit, that's what you get taxed on. But if you don't know, let me know down below and I'll try and explain it a little bit better. Now, just a quick one on this, you do actually have a tax-free allowance, which is around £12,300, or I think it's around 6,150 for trusts. So I definitely recommend you do a bit of reading on that. But as I mentioned in another video, you just need to understand it. You need to be aware of these kind of things because nobody's going to tell you otherwise. So that's it. That's literally the quickest video I think I've done on property, and I hope you found this tax talk interesting and it's something that's brought some attention to your eyes because I'll be completely honest, I didn't. I mean, tax really just bores me. But do stick around, maybe consider subscribing because I have videos literally every single day. I do have that many videos, but I'm releasing them every few days because people might get annoyed with me. But I'm just trying to do these videos to really help you move forward on your journey and try not to make the same mistakes as myself, and also try and save money because people now, as we move into the end of furlough, people are going to start needing your money. And when I say the people, I mean the fake gurus. So literally save your money, educate yourself as much as possible. Maybe watch this video here because I think this is going to help you, and also this one here because again, they're going to give you some insight into at least my perspective, but it's a shared perspective across many property investors about what's actually going to happen. And then save your money for yourself. Save your money for you, your family, to really invest in your guys' future and not spend it on gurus or investors who are so rich that they somehow need your money. And until next time, thanks for watching. Anyway, the money you legally need to give away, and I hope